Hello everybody and welcome to this webinar. We're live now on FX Street, and if you're watching this recording, you have any question, you can see my email on the screen. It's pedro@predictive.com, and we're here live on FX Street. Today we're gonna talk a little bit about the order flow system. We are with Nailing FX, and before we begin, let's read the disclaimer. Okay, the following video clips demonstrations are for educational and instructional purpose only. Predictive provides this video purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in this video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the result you may receive on using our products. And this session is brought to you by Predictive with the Tradewithufos indicator and Skydesk for virtual machine hosting. So let me talk to you a little bit before we begin about our sponsor right here. And remember, you have my email right on the screen. You're watching the recording. If you are live, you can ask any question on the chat bar. And let me talk to you a little bit about Predictive. We have the UFO indicator. Let me just show you right away. So here we are in trading view. We're looking at the euro, and you can see these red areas about and this yellow and green below the chart, right? What this indicator does is telling us where the buyers and the sellers may be, okay, according to the volume that has been traded in these areas. So it's a very, very good indicator, which show us the zones where we can put our entries or stop loss, okay, and plan our trades. Of course, you have to, before using this indicator, you can read all the instructions you have, and you have to have a bias, whether it's buyer or selling, and use this as a guide to put in your entries and your stop losses. Is very, very good. You can join for free. The website is right here. It's tradewithufos.com/Pedro. You can use this. This is my link. So you just put your name here, your email, and you have a free membership when you can later download or install the indicator in TradingView. And if you want a one-on-one coaching with me, here's also the link that you can use to schedule a one-on-one with me. Okay. All right. Let's move to the next subject. Here we have Skydesk, which is BPS provider. It's a cloud-based forex BPS, so you don't need to download anything. All you have to do is just logging into your account, and you will see your BPS in your web browser, in any web browser. You don't need to download or install anything. You have it available in every place, everywhere, just by any web browser. Prices are very nice. You can see here, and different versions and options that you can use. Okay, so skydesk.com. You want to check out this forex BPS, right? That you can use for any EA or automated trading system. Okay. All right. So let's begin. So we are here to talk about the order flow. And let me just begin with a chart. Let's put up a simple chart. This is tick chart, 233 tick chart from the euro. So it just shows us in bars what the price is doing. You can see the price right here. It's pretty similar with what we saw with the trading view chart. Let me just show it to you next to this one. Okay, you can see the movement is the same, right? It's a little bit different because I'm using tick here, and here's we're using 5-minute candles. Okay, so it's pretty similar in, let's say, the formation, but in tick chart it creates a bar only when 233 ticks has been traded. Okay, that's the difference between time and tick chart, even volume chart. Because for me, time is irrelevant in trading. Okay, because what is really important is the volume of what's being, going on, what's being traded, not the time that it took for a price to reach certain areas, right? So we're looking at a candlestick chart like most people do. And this is probably all you get from most application and most trading software. But here we can have a lot more. We can see in depth what is actually going on into the market. Um, just like with the UFO indicator showing us the areas that we might use to sell and to buy, we can have this information in depth, a little bit more complex, but very useful. So let me just add a little thing to this chart. Let's add volume. All right. So here we have on the left side we have the volume information, and we can see where is the most traded price. Okay, because remember that volume is only let's say relevant if it shows like this horizontally, because you can see exactly which price was the volume taken. If you use the volume vertically, you won't know which price. You will only know at maybe the time, which candle. So that's pretty much useless. Okay, let me just add point of control. Okay, so on the left side we have now the volume, showing us bar formation, and we have three blue bars that show us the point of control, the value area low and value area high. And this is important for me because I want to trade inside this area, okay? Because it's where the volume is, and it's where I will be able to, to put my stop loss with more safe than outside these areas. Okay, outside this area, the price can move very fast in one direction or another. All right, so the point of control, what it means is the most traded price of the day. In this case, we are looking at the volume for the current day. We can have that for last day, the week, last week, current month, last month, or for the contract. In this case, the euro contract we're looking at. Okay. So what I will do with this information is visually look at which price was have more interest. The trader has more interest in, so they put the trades in these ranges here, okay, for some reason. Well, we don't know if they were buying or selling yet, but we know that there were a lot of action in these price areas here. So we can use that as our entry or stop losses depending on how we're looking at the market at the moment, okay? And we have the barrier area low and the barrier area high. What it means is that between these two lines, there are like, depending on how you set this up, but it will be 75 or 80% of the whole day trade between these two lines. Everything outside of this, it doesn't have too much weight on volume wise to be inside these two parameters. Okay, that's what it means, barrier area low and barrier area high. Okay, remember, you have any question, please use the chat. If you are watching the recording, here's my email, pedro@predictive.com. You want access to this software, just send me an email. I will send you the link so you can download it and try it. Okay. All right. Let's add something else into the here. I want to add another indicator, which is the depth of market. All right. And we can see it on the right side. Now we can see the pending orders. Okay, this is something you won't see anywhere but in this type of software. Okay, so now what we can see here is where the pending selling orders are, or where the pending buying orders are. So we really know how much lots are being waiting here to be bought and waiting here to be sold. Okay, we know that information. This is real information in real time. We can see actually a lot up, you know, where money is, where people is waiting to get filled with a pending order. Okay, remember that this is just pending order. This is not market orders. We only see here is pending orders, buying or selling. Okay, very depth. This is the depth of the market, and we can see it. It's being shown on horizontal way where we can actually see the price that is being offered. This 444 lots. Okay, this is very useful information if you want to um, use it as maybe depending on, you can use any strategy. And I don't know, I don't like technical analysis, but if you like technical analysis and you find, I don't know, let's say a support resistance or a Fibonacci number, I just want to, you know, to check that that area, that price actually is interested for somebody, or somebody's looking at it, or so, you know, it will have pending orders. It will have a lot of pending orders in that exact price. There's nothing, there's no interest. Okay, there's nothing that you can say, oh yes, this is gonna work. No, but when you see this, you see a lot of interest here. 282 lots waiting to be filled. There's somebody, you know, some institution or funds or whatever thinking about this price. You know, there's something about this price that are waiting for to be filled. Okay, remember that these orders can be taken off as well. I mean, it's not they are not there, you know, forever. They can be taken off. They can be filled. They cannot be filled. I mean, many things can happen, but you can see where they are and, you know, just say, oh, there's something here of interest for somebody. Okay, and this is just part of the order flow system. It's just one thing that you have to be aware of. Okay, so there's a lot more, way a lot more. Let's add another thing that I like to use on my trading is the VWAP. It's an indicator that shows me the volume average. Okay, this is the volume average, this red one. So what it means is, remember that the point of control is the price that has been, you know, most traded during the session. In this case, because we're looking at the session, okay, we're looking at the current day. So there's a volume average. It's pretty much like the point of control, but it's, you know, it's an average. It's like you would say a moving average, but it's based on volume. So it is really means something, not like a moving average. It means nothing. This means something because it's based on volume, and volume is what actually move the prices, all right? And what I see here is this line here is showing me, let's say the volume average center point, and we have the deviations, one deviation and two deviations on the upside, and two on the downside. Okay, so just by looking at this, I can see, for example, um, when the price is you know, trading about this moving average or below, it might influence my bias, right? If I want to sell or want to buy. It's very easy to spot that, right? To see where is the, you know, is going up or going down just from this line. All right, but that's not, let's say, carved in stone. I mean, you can use that as a reference, and it's very important because it's where the the fair price is. Okay, this red line is where traders agreed that is the fair price. So most trades with the highest volume are going to be made nearby this area. Okay, as you can see, it's always very close to the point of control. You can see the volumes lines here that are bigger when this line is in line with this, right? It's close to this. Okay, and you can also check the pending orders that are nearby. All right, the current pending order nearby this point of control or this average here. Okay, so it's another reference that you can use. Okay, I have a question from Brian. Hello, Brian. How do I get information on pending orders? Okay, this is the pending orders you can see on the right side. This is called the depth of market. It's an indicator that, but to be able to get this data, okay, you need a data feed. Okay, in this case, I'm using Rhythmix as a data feed for the software. Okay, so you will get the whole market volume and trades because I'm using the euro futures in this case, which is a centralized market, and I get all the information, okay, from the data feed for this market. Okay, so that's how you get this depth of market. It's unlimited. You can see I have no limit to see where the pending orders are. Okay, in many software, many platforms, brokers, etc., you may have a depth of market, but only like 10 steps. Okay, you will only see 10 lines here, 10 numbers in each side, mostly. Okay, but if we use a data feed, that is, it show us unlimited amount of depth, we can have that information. You can plan your trades very, very nicely, you know, in the long run. You looking for a certain price, you will know exactly that somebody else is looking at that price and how many contracts there are there. Okay, and remember, this is just one thing from the order flow. Okay? This is just one element that you can have and you can use on your behalf. Okay, you have to combine this with other stuff like the volume. All right, like the I use this as a reference, the big WAP. Okay, because institutions and traders use this as well as reference. And there's another thing that you can use when you're trading with order flow. You would like to see exactly what is being traded. For example, how many, well, here you can see how many buyers, how many sellers are because you have the total down here. Okay, so you can have an idea on what direction might take the price, okay, based on that. Don't believe that if you have more selling here, it will go down, or you have more buyers here, it will go up. No, I think it's the opposite way. Okay, because when you have more offer in one direction, price tend to go into that. Let's say here we have on the buying side 6,700, on the selling side 6,600. So the price is tending to go down because there's more offer, okay, on this side than in this side. Okay, it's a little bit tricky to understand when you see the order flow for the first time, but let me show you a little bit. I think you should try to understand how the market works before you trade. Okay, this is very basic, and you should know the market mechanics before entering here, because these people that trade professionally, they know, right? They know how it works. So you need to know that, and I'm going to explain it to you very, very easy, very basically here. What you need to basically know the mechanics of the market. And you can see here is in the middle is the price. You can see right here, have the price. This is the euro, okay? And we have the red column and the blue column. The red column is this one, the same we're looking at here, the same numbers. You can see they are the same exact numbers. And we have the blue column, which is this green one, okay, on the right side. So this is our depending orders on one side and the other. And here we have the volume, okay, here on the right, we have the volume. And what is important here, okay, is what actually moves the price. Okay, you might think, oh, there's a lot of sellers. Maybe the price will go down. There's a lot of buyers. The price will go up. That really doesn't matter because these orders, are pending there. They are just waiting to be filled. They are having no action more than just waiting. Okay, if nobody takes these orders, the price won't move anyway. Okay, if nobody is taking orders, the prices will remain the same. But what we're looking here in these middle columns are the market orders. Okay, if let's say this blue column is people offering right to buy at this price, and what we see how when it goes down is that people is selling to them. Okay, they are filling their pending order. You can see how it goes down right now, how it's going now, because in real time and a market order is being filling these pending orders. And when you take all this offer here, it will move the price down. And in the other side, these sellers, okay, they are selling, and there are the aggressive buyers in this case. With the market order, they are taking all that is being asked here, okay, and that will move the price up. All right, that's the basic market mechanics. Okay, that's what moves the price up and down, not depending orders. It's not a news. It's not nothing. It's just this. It's the market orders of aggressive trader. Okay, everything that happened on the market, every movement upside and downside will be by these orders. Okay, these are the type of order. Let me clean it up so you can see them. It's a type of order that will actually move the price. Okay. And you can see here, there's another function that we can see if when somebody takes from, you can see minus 30, somebody took off these contracts from the pending side. Okay, they just remove it because you see here, 200 and something, it was just removed from the market because there can be spoofing as well. I mean, we can see, I don't know, 100 contracts here, and suddenly they will be removed before they get filled up. All right, that's a spoofing, trying to fool somebody. Remember that the market is full of traps, right? This is traps everywhere, and you have to be aware of that. Okay, so this is basic market mechanics. Some people just trade by looking at this. Okay, it's very difficult. You have to spend many hours learning to know the actions that is going on here, to be able to trade from the dump, from the depth of market by itself. Okay, but you can combine all this information. You can put it on the chart just like I did here on the right side. Okay, it's pretty much the same. We can see here because we don't see right now, we don't see here the market orders, but we see the pending orders, right? But we can see the market orders as well. Let me just show you. Okay, remember, if you have any question, please, you can use the chat. If you're watching the recording, you can send me an email at pedro@predicted.com. Okay, all right, back to the chart. So we have some elements that we can use in order to trade. We have the volume average, the VWAP. We have the pending orders, which is the depth from the market. On the right side, we have the volume. On the left side, so we know where most trades happened. Okay, but we can also know exactly what's going on inside a candle. Let me just show you that. Okay, so I open this up. Let me just spread this a little bit. I can see exactly what's being traded. Okay, in this candle, how many buyers, how many sellers, how much did they buy, how much did they sell. Okay, I can see everything inside the candles. There are many types of candles. can see here, you can see bid and ask, you can see time, you can see trades, you can see volume, you can see delta. All right, in this case, I'm using bid and ask with an imbalance indicator. Okay, this is embedded here, bid and ask imbalance. What it shows me is when imbalance happened. First, you need to know what an imbalance is. An imbalance is when a trade it has a certain percentage of difference diagonally to another. Okay, I have this set up for 400%. So when it's a difference for 100% or more between one trade and the other, it will highlight it in red for the sellers and in green for the buyers. Okay, so we can see the big difference. I actually added volume to it, so a volume filter. So I will only see when they have more than 150 ticks of volume. Okay, so it will only show me most big trades that will happen. You can see here 113, 84, okay, 53. You can see in many of these candles where are the most volume, which is this um, black box, and you can see the imbalance. Okay, I like to trade imbalance because it really shows me, the intention of the traders. It shows me where the trap traders are, and for example, let me just try to find a good example for a trap trader here. You can see here in this, let me just highlight it, all right, this candle, that there was 151 lots on the buy side, but the price didn't move up, okay? The price didn't move at all, okay? Just moving down because you can see how the price was moving up, so there were more buyers and buyers. They thought that the price was going to keep going up, okay? So they put more money in. But this was a trap. You can see the seller here, how he was loading his pocket with a lot of lots. You can see 400, 373, 200, 262, lot of trades on the upside. Okay, you can see it's on the upside of the candle, not on the downside. Okay, so but the price keep moving up because he was letting it go up. Okay, and once he decided that it's time to take profit, you know, the buyers they're still putting in buys here. And you can see how this big buy didn't move the market anywhere up. So it start to slide down. Okay, he will let it slide down. And with these losers, these buyers, are in trouble, they will see, oh, I'm going negative, right? So if you're buying, the only way to get out is by selling. Okay, and when and if you are losing money and you start selling, you will move the market down. Okay, you will move the market down because it's a forced sell. Okay, so the price start move down, down, down. It will move up time to time because um, when these stop losses are being hit, it will move the price a little bit on the upside, but then it will continue to go down. Okay, until it's the market is the one that put the trap here is satisfied and will start taking the profit, and then we'll start moving the price back up certain points or maybe recharge his position. But you can see how the price still going down with more selling because stop losses. Okay, and well, here we are right now. I mean, we're still in that down movement from those losers here on the top. Okay, that's what actually happens when the market change direction. Okay, it was going up. You can see how it was going up, and then it certainly just stopped. Okay, and start moving down very fast. It's because of that the stop losses are actually other sellers joining in. and that's what's actually happening. And we can see that only if we're looking at the order flow information. There's no other way you can see that in any platform or any software. You only see this in order flow like this. Okay, there are many stuff that you can add if you want to help yourself on the trading. Pretty easy. We can, for example, use this to see where the real supports and resistance are. Okay, we can see where they really are, because we can see the volume inside the candle. If you're using candle, okay, you're using any candle, but because you maybe after you get used to this, you may never see the candle again. You want just to see the information and see what's going on, who's buying, who's selling, how many they are buying, how many they are selling, how many pending orders are they taking the liquidity or not? Are there many spoofers in the market? You know, where's the trap? Where are the trap traders are? Where are the losers? Right? You can see all that just by looking at this information. Of course, it takes time. It's not maybe that easy as a, you know, technical analysis, which is what everybody does because it's simple and but doesn't work. But this is information. This is market data. Okay, this is quantitative trading. This is what actually is happening in the market. All right, this is the real deal. Call it away. And it doesn't matter how many people use these techniques. It will always work because it's how the markets has been working since the beginning. Okay, the order flow. Well, before we move on, let me know if you have any question. You can use the chat. If you are live here with us, or if you are watching the recording, remember you can just send me an email at pedro@redictive.com, and I will answer you by email. If you want access to the software as well, you can just send me an email asking me for that, and I will send you an email, okay? Anytime you would like to have this information. Okay, so let me show you another tool that might be very interesting to use. You want to use the quantity information. Is this the oil price? The oil price information just show you, you know, in a glance, what's the most volume price you order by volume. You can see here is the same as the point of control we have here. Okay, but we can see how many trades, if they were buyers or they were sellers. Okay, so we can try to understand the direction of the trades. So that will help us to figure out our bias. Okay, where you would like to go on the buying side or the selling side. We can pretty much see here that it was a negative 295 delta. Okay, meaning that the difference between the bid and ask was negative. So they were actually selling at that price. So that can influence our decision to, you know, to go on selling or buying. And look how it was. Remember that this is the point of control right here, and how good it went on the downside. Okay, from this price. But you cannot use this alone. Okay, you have to combine with all the other information you are getting from the market. Okay, there are many techniques that you can use to, you know, to do a quick trade. I want to tell you something. I don't believe in, you know, when in these traders that are put trades for days or hours. I don't like that because it's very hard already to try to predict what's going on in the next, I don't know, 5 minutes. How you pretending to predict what's going on in the next hour or next day? I mean, not me at least. I can't. All right. I prefer to just look at the data and take a quick decision made a trade at a given price. Just wait for that price to happen and put my trade in and get out as fast as I can when I get to an area that I think, according to the data I have, that it will be very hard for the price to go through, or at least it will take a lot of strength or force to go through that price, right? So I prefer to do that before trying to just guess what's going to happen in an hour, 2 hours, in a day, in a week, all right? So that's what I do. I just take price area. I know there are trap traders in, wait for the price to get nearby because I know they will start closing their trades because they are trapped. And after they do that, the price will move into my side on my direction. It's when I go in and I get out pretty fast, okay? Because I know that that's what's going to happen. I know how the market works. I know the market mechanics, and I know that I should not be in for a long time because price might change, direction might change because some trader decided to, just to buy or sell and move the market on the other side. Okay, so that's one thing I just wanted to know. Another advice I would like to tell you is focus on an asset. Okay, for example, I trade the euro, and I don't usually look at another asset because I prefer to know my asset very well, so I can get familiar with the volume, with the pending orders. I know, for example, that 125 is a big pending order at this time of the day, all right? Or I know that as I see, I don't know, 5, 10 pending orders is very small. I mean, I need to get familiar with my market, with what I'm trading, with the times. For example, at certain times of the day when I trade, I trade only like 2 hours a day, okay, 2-3 hours. So I get familiar with what's going on in that period of time. Okay, so I don't get surprises. All right, so I always know you don't have to trade all day because that's impossible. I mean, you just wasting your time there, and it's better, just focus on what was on what you see every day. Okay. Well, we're running out of time. This was a 45-minute session here on FX Street. Remember, if you want to have access to the software, just send me an email. Okay, you want to ask me anything, use my email, pedro@tradewithufos.com. You're watching the recording. And we have YouTube channel. I will be every Tuesday, okay, at the same time, either on YouTube or in FX Street. All right, with more explanation. You want to follow up and ask questions next time, just join in the next Tuesday. Okay. Well, that's pretty much it. Thank you for joining in, the guys who are here live right now, and thank you guys just for watching the recording as well. Remember that my email is right on the screen, pedro@tradewithufos.com. Thank you so much. See you next time. Bye-bye.